Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard Macbeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
It's a delight to be on.
Hilliard, two divergent things happening with people looking for rental accommodation, and if you're a landlord in both urban and rural areas, apparently in rural BC and Alberta, you can't find a place to rent to save your life. Meanwhile, in New York, landlords who were renting people property at pretty hefty prices are now going bankrupt. What's the two divergent stories here and why?
Well, the rents in the big cities, and I think this extends to Vancouver and Toronto as well, is they've been plummeting. So, like, really nice accommodation, luxury, two-bedroom condos and that sort of thing have come down. I don't know the exact amount, but $2,000, $3,000 will get you a nice place, and that's just not enough for these landlords to make enough money to pay their debts. So, one big one in the Upper West Side, Manhattan, and Harlem, those are sort of two different markets, obviously, just declared bankruptcy. And that's kind of a first in the sense that most of the bankruptcies so far have been more like people that own shopping malls and things like that. So the apartment buildings are starting to get into trouble. And the interesting thing about that is that that's always considered in big cities to be very safe investments. So people were buying them at really, really low future returns, which is denoted by the cap rate, they call it the capitalization rate, because it was such a safe haven asset, because there would always be demand and the rents would always go up, they'd never go down. So that's turned out to be wrong. And now people are fleeing to the small centers, places outside of the big cities. And of course, there's never been a lot of rental accommodation. Houses are cheap there, so people generally tend to buy. They don't rent. And though somebody wants to rent in there, they're out of luck. And now, I'm not sure if it's people that are actually moving. I honestly don't know personally anybody who's actually moved from say Edmonton or Calgary to a small town. So it might be speculators that are assuming that people are going to make the move, and they're trying to get ahead of it by trying to lock up properties. And there's been a couple articles indicating that there's just nothing to be had as the prices have gone up and there's nothing for sale. So I don't know. I think people might find that it's difficult living in a small town, especially for older people, because there's a lack of amenities like drugstores and doctor's appointments, hospital visits, all that kind of stuff are very difficult in a small center.
Now, taking a look what's happened to the stock market over the year, March, we had the huge crash on the 23rd. Since then, it's been nothing but blue sky. Why have we been so enthusiastic about stocks?
Well, it's interesting because there's a real split here. There's the winners and there's the losers. So on the winning side, the Nasdaq in the U.S. is up 41% year to date, and then if you go into the clean tech arena, which is the renewable energy stocks generally, it's 137% year to date, and yet if you look at so there's very little of those two types of stocks in Canada. So if you look in Canada at the dominant features in Canada, if you look at the Canadian financials, they're down 2.1%, which is obviously way behind the general market in the world. But the oil and gas index, which is the symbol is XEG, is down 37%. And at one point in March, it was down 71%. So the typical investor in Alberta would own the banks and the oil and gas stocks. So it's been a horrible time for the Alberta investors, unless they were smart enough to invest outside of Canada into the tech sector, or especially if they got into the clean tech sector, renewable energy sector.
Gold and silver stocks, how did they do?
Well, gold's, I mean, in a compared to the stock market, they've done phenomenally well. The golds are up 43%, roughly. The biggest one, Barrick Gold's only up 23%, and Newmont was up 37%. So, and there's a bunch of smaller ones that are up way more than that. So they're finally starting to pay off as a safe haven. And of course, the price of gold was pretty good. It was over 2,000 an ounce, and it's back down to about 1,800 an ounce. But even at 1,800 an ounce, the gold sector does really well. The profits roll into the companies, and the companies have been really careful. There's been really good financial discipline in the gold mining companies, which is a first. I think in the past they've always gone kind of crazy at this point, but they've been so careful that there hasn't been a major gold discovery for 10 years now. It's the longest drought ever where there hasn't been a significant gold discovery. And that's probably because that there's been very little money spent. The company's been so careful about their spending that they haven't spent enough money to look for the next big find.
We'll have more with Hilliard Macbeth right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Hilliard Macbeth. Hilliard, the Canadian economy relies so much on oil and gas. How did it fare over the year?
Well, the sector's doing really poorly. There's a couple of 100,000 jobs, and there's usually about 40 or 50 or 60 or 70 billion dollars of investment into that sector. But the jobs are down, and the investment is way down. So it's a really difficult time, and in Alberta is certainly feeling the pressure. And it's probably just going to get worse because as people shift to this emphasis with the change in the administration of the U.S. in January, there's a huge new push for clean energy, renewable energy, and that's going to put even more downward pressure on the demand for oil and gas. So even if they had the pipelines to send the oil to the U.S., they might not have the demand down there. And it's not necessarily a totally negative thing in the sense that the U.S. government may put a halt to fracking. Joe Biden, the new president incoming, was challenged about whether he was going to ban fracking altogether, but he's certainly going to probably ban it on federal lands, and that could slow down the discovery of new oil in the U.S., and that might give Canadian oil a longer lifespan. But the difficulties are mounting for the sector, and there really isn't anything. There's the auto sector in Ontario, but that's struggling. The number of cars produced in Ontario has been sliding for years now, even despite of all the tens of billions of dollars that were put in the 2009 bankruptcy with GM and Chrysler. The companies have not expanded the employment. They've contracted the employment in Ontario, and it's been shifted down to Texas and Mexico. So that sector is struggling as well. So Canada desperately needs a new exciting area to grow, and just not sure what it's going to be.
Didn't Alberta talk about hydrogen production?
Yes, hydrogen is the one thing that has been talked all over the world. In fact, Germany put in a huge amount of money to stimulate hydrogen development, and of course Alberta is talking about hydrogen. The federal government, in their plan that was released a couple of weeks ago, talked about hydrogen as a key new sector. So that could actually be a use for natural gas. The problem is it's not necessarily clean because getting hydrogen from natural gas has the byproduct of carbon. So the carbon would have to be captured and used or stored, and that's expensive. There are a couple of projects in Edmonton, they're both in Edmonton, trying to figure out how to store carbon. And if the carbon price is high enough, it'll pay off, or if people just decide that that's what they need to do. But there are other ways to get hydrogen. You can get it from using electrolysis from water, and so you don't need to use natural gas. But I think a lot of the people in the industry are hoping that hydrogen will be natural gas will be used to produce hydrogen, and hydrogen will become a whole new industry all over the world.
Well, the argument about using electricity to produce hydrogen is you lose energy. Why not just put the electricity directly in a vehicle rather than using it to convert something else that has to be transported that doesn't have a transportation system set up so far? Electricity does.
Yeah, the likelihood is that hydrogen won't be used for cars, although Toyota disagrees with that. They've got a car out that's run on hydrogen, but it doesn't, as you say, you're absolutely right, it doesn't make a lot of sense. The battery would work better. But large trucks and possibly ocean ships, airplanes, all that kind of stuff, hydrogen could actually play a role because it's got a better density and energy density than electric batteries. So it's not clear. There are also some other uses for hydrogen that very hard things like steel and concrete uses a lot of coal, and it's really hard to find a replacement for that. Electricity can't replace it, so hydrogen might be able to do that. There's a number of uses like that hydrogen might have a role, but I don't expect that hydrogen will become a major factor in automobiles and light trucks. It just doesn't. It's just the electric conversion is just too far ahead now.
We'll have more with Hilliard Macbeth right after this.
Value from success, growth, and discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard Macbeth. Hilliard, speaking of electric vehicles, Tesla, they split their stock this year. They're the most funded vehicle company in the world, even though they hardly produce any. What's the story there?
Well, the big thing that happened on December 21st was the inclusion into the S&P 500. So what happens with that is the S&P 500 obviously has 500 companies in it, and Tesla's now been added in there because it met the requirements. And it's a $600 billion market cap stock, so it ranks number 5 in all the stocks in the S&P 500. So it's going to cause a bunch of so there's a whole bunch of institutional investors that either required to track the S&P 500, they're called passive investors, or there's other mutual funds that track the S&P because that's their benchmark that they have to beat. They can't afford to leave out a stock like Tesla because it's so volatile, even though it is very expensive right now. So there's $11 trillion worth of money that tracks the S&P 500, and the Tesla has a 1.5% weighting in the S&P 500 now. So that basically comes out to between $150 billion and $200 billion worth of stock that has to be bought in Tesla by these funds. and the market cap, as I mentioned, is $600 billion. So there's like a quarter to a third of the market cap of Tesla has to be turned over into the funds that track the S&P 500. Now, they may have bought some shares already ahead of the inclusion, because it was fairly well known as far back as September that this was going to happen at some point. But that's still an awful lot of trading. So one of the things that Tesla did when this is happening was they issued some new stock, which is easier for the funds to buy and try and buy a huge amount off the market. But that was only $5 billion, so that's not very much. What the total needed is at least $150 billion. So there's still a big problem there in terms of how the funds are going to get their hands on that stock without pushing it even higher than it already is. And of course, people rightly point out that the company produces less than around 500. The announcement's going to come soon. It's around 500,000 vehicles compared to Volkswagen and Toyota, that each produce about 10 million vehicles a year, and their market caps, of course, are much smaller than Tesla's.
Bitcoin, it soared to new highs, and it seems to happen around my birthday every year in mid-December. Why is that?
I don't understand Bitcoin. It's like there's people that don't trust the government, and they don't trust fiat money, and they're convinced that the government was going to somehow destroy the value of holding U.S. dollars or something like that. So there's also started out a bit as a vehicle to be used where anonymity is possible for people that needed to remain hidden from the authorities. But I just can't imagine why people put their faith in a situation like that, because we just don't know. To give you an example, there's allegedly there's a limit of 24 million Bitcoin that can ever be produced, and so far 18 million have been produced. So it's getting harder and harder to produce them, because you have to solve this complicated mathematical equation to earn a Bitcoin. So 18 million so far. There's 6 million left to be discovered, but it's going to take more and more electrical power to do that. But 4 million of the 18 million that have been discovered so far have been lost. So there's no way to retrieve them. They've been lost. They went in. I don't know if they went into a wallet, and people hold their Bitcoin in something called a wallet, and then they've lost their password or whatever. So it's very, very. I'm very skeptical. And also, even though they say there's a limit of 24 million, what's to stop the people that are controlling it, whoever they are, because we don't know who they are, just say overnight, oh, you know what, we decided we're going to expand it to 30 million or 40 million or whatever. So the old version of that was gold, and gold, the attraction of gold was it was tangible, it was metallic, it was pretty to look at, and it was very hard to find. So you couldn't increase the amount of gold outstanding very quickly. And that's been around for hundreds of years, if not thousands of years. So, I don't know. For me, I would rather, if I didn't trust fiat money, I would rather, put my faith in owning some gold or some gold mining companies rather than Bitcoin.
Yeah. Now, for the people who follow Robinhood, who supposedly is a cost-free trading platform, but they sell all your information, so you are paying a price, you just don't know it. There's a real age split. The people who use that tend to be quite a bit younger. They don't care about gold at all. But they've gone into things like Hertz Rent-A-Car, who went bankrupt.
Yeah, they tend to be very impulsive, and now I'm sure they're learning as they go. But one of the things they don't realize is that their trades. So Robinhood doesn't actually do the trades themselves. They sell the trades to a company called Citadel Securities and probably other companies now. And the rule used to be, I don't know what happened, but it used to be that if you took money in from somebody like we do, you're required by law to find the best possible price. But if you choose one one trader over all the other traders and make an agreement with that particular one, say Citadel, to trade all of your orders for you, a couple of things happen. One is that Citadel can see the flow of orders and can see what direction price is going on certain stocks, and there's a temptation there to do what they call front running the trade. And the second thing is there's no discipline on them to give you the best possible price. So, like, one of the reasons Robinhood took off was because it says 0 cents, right? But if the stock is $2 and the bid is $2 and the ask is $2.10, that's a huge spread. It's a 5% spread. So if you're paying $2.10 when you should be paying $2, you're actually losing 5% on every trade. And the problem with that is that a lot of the Robinhood traders trade all the time. They trade very frequently. So they're giving up, without realizing it, they're giving up a lot of money that probably should be coming to them. And there's really no way that they can monitor it or they don't have any clout because they're doing very small orders. They're doing shares, 100 shares, 50 shares. That's one of the attractions of Robinhood. You can put a very small amount of money in there. So it's just a setup for people to abuse the system and take advantage of it.
Hilliard, do you feel there will be a big trend going into the new year?
Well, I think the race is on between obviously the big thing is the virus and the impact on the economy if we have to stay in another lockdown. And we got the vaccine coming, and but on the other side of the race is the new variant of the COVID-19 virus, which spreads much faster and much more aggressively than the original variant. So if there's not enough vaccine and it's not rolled out quickly enough, or if for some reason it doesn't work against the new variant, then that would be the big risk on the stock market, because I think the stock market basically is trading it for perfection. It's at record high levels. This is very reminds me of the 1999-2000 bubble with those numbers that we reviewed earlier, especially in the technology sector. And if there's a setback, it would definitely come from the economy being weaker than expected, and the vaccine saving us from COVID-19 later than expected. I think it's a universal expectation that by June or July we're going to be fine again. We'll be able to all go out and dance in the streets and go to restaurants and bars and get on airplanes and cruise ships. And if for some reason that's delayed, then that could trigger a sell-off. And it could be a sell-off similar to what happened in March, because we're trading at very lofty levels right now.
Hilliard, I hope Santa was generous and have a prosperous and happy new year.
Same to you, Jim.
My guest has been Hilliard Macbeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethmcleodgroup.com. Find him on Twitter at HMACB. If you have any questions for Hilliard or any of our other guests, you can send them to info@housestreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of House Street Media Incorporated.